I just can't get on I can't be in something where Mr. Bitcoin is about to go down big.
Wow, what a day yesterday. Bitcoin is up almost 30% since Jim Cramer said Mr. Bitcoin is about to go down big, and that was 13 days ago. The inverse Cramer meme is real. Plus, this one altcoin is up 100% in the last 24 hours. This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop the latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Altcoin Buzz, in collaboration with Engine Starter, brings you an exclusive giveaway. Now get a 1-month free Altcoin Buzz Alpha membership that includes buy and sell calls, portfolio updates, airdrops, and IDO strategies, as well as new gems and Q&As. See what our members have been saying and don't miss out? Check out the link in the description below. After briefly pushing past $35,000 towards the end of the US trading day before dropping back down, Bitcoin is continuing its march back towards $35,000, up 12% as New York opens. This rally, which pushed Bitcoin past a critical resistance point of $31,000, can be attributed to BlackRock listing its Bitcoin ETF on the Depository Trust and Clearing Corporation database with the ticker IBTC. The sudden spike is just a preview of what will happen if an ETF actually gets approved. Crypto Rover on X wrote, BlackRock has told the SEC it will seed its spot Bitcoin ETF in October in preparation for approval. Seeding an ETF involves obtaining initial capital, usually from a bank or broker-dealer, to buy several creation units, such as Bitcoin in this context. This capital is exchanged for ETF shares, which become available for open market trading on the first day. So basically, BlackRock is going to start buying Bitcoin. The DCC is a massive piece of behind-the-scenes infrastructure in US financial markets. It handles an astounding $2.3 quadrillion worth of stock sales annually, which makes it the largest financial clearinghouse in the world. This follows news last week that the fund manager's latest application amendment shows that a seed investor could be funding the product this month. In a filing to the United States Securities and Exchange Commission last week, the world's biggest fund manager said the seed capital investor had planned to buy shares in October. Applications for ETFs go through a number of drafts, which usually get amended and refiled after feedback from the commission, before they're officially approved or rejected. BlackRock's seed capital investor section in the filing does not mean that the ETF will necessarily launch this month or even next month, but experts now think that a Bitcoin ETF could get approved very soon, with some analysts at Bloomberg Intelligence saying that there's a 90% chance one will get approved in January. BlackRock CEO Larry Fink's flight to quality comments mirrors Paul Tudor Jones' recent remarks as well, saying 20 years ago gold served this purpose, but now it's Bitcoin. Dylan LeClaire put it well recently, saying this.
ETF has been something that's been talked about in these circles for years, and it's finally happening. But really, this is just Bitcoin doing its thing, right? I mean, if you're looking at 1 month, 3 month, 6 month, 1 year, Bitcoin supply has never been more tightly held. Anybody that's been dollar cost averaging, despite Bitcoin being down, 52% from its all-time high, anybody that's ever dollar cost averaged at any date is in the green today, right? So, you're looking at across this investment landscape, the risk-free asset in all of the investment landscape, the US Treasury bond, is down more from its all-time high than Bitcoin, right? So there's a lot of narrative violations going on. And I think the ETFs and the headlines obviously are the thing that people like to talk about. But there's much more going on here, and it's the same thing that Bitcoin proponents have been hammering home time and time again. We have an immutable, digitally scarce asset, and that's the real story, and that's why Larry Fink and BlackRock and those types are very much interested.
Also, make sure to check out Randy's TA video on our Altcoin Buzz trading channel to see how to manage this Bitcoin pump. The Pepe meme coin bucked the trend of Bitcoin dominance over the past 24 hours, rising by 31%, following a $5.5 million token burn. Burning permanently removes tokens from the supply and is done by sending them to an address not controlled by anyone. The popular frog-themed meme coin is now trading at 2-month highs as the burn quells concerns over the team's token holdings. The team now holds 3.79 trillion tokens, worth $3.72 million, which would have minimal impact if sold on the open market, as 24-hour trading volume has surged to 397 million. A post on X from the Pepe team wrote, a new team of advisors has been brought on to guide Pepe forward. Uses for the remaining 3.79 trillion tokens are attributed to the original team centralized exchange multi-sig wallet for strategic partnerships, and marketing opportunities are currently being explored. The decision to burn tokens came after a handful of rogue Pepe developers executed a series of unexpected transfers out of the project's multi-sig wallet, effectively stealing millions of dollars worth of Pepe, alleged by a team member. The tokens burned equated to 1.6% of the meme coin's total supply, and the rise in Pepe coincided with Bitcoin rallying to a 17-month high of $35,000. Crypto exchange Coinbase has refuted rumors that it has imposed a $5,000 per week limit on Bitcoin withdrawals after a user's post claiming as such gained traction on social media. An October 24th post from a user on X claimed that he had been hit with a purported policy that restricted his account withdrawals of Bitcoin from Coinbase to a maximum threshold of $5,000 a week. The post gained over 250,000 views with more than 420 retweets and nearly 2,000 likes. However, a spokesperson from Coinbase said that these claims were inaccurate and that no such policy existed that limited withdrawals when selling to Coinbase cash balances. They said withdrawing from Coinbase will be dependent on the payment method you are using to withdraw. The unfounded rumors of withdrawal limits came around the same time that Coinbase experienced brief difficulty processing trades. According to Coinbase's official status page, the crypto exchange began experiencing difficulties processing trades around 6 p.m. UTC on October 23rd. Less than an hour later, the exchange provided an update saying the issue had been fixed and the team was monitoring trading activity for ongoing issues. The trading delays on Coinbase occurred amid a frenzy of trading activity throughout the market as the price of Bitcoin surged to a high of $35,000, a level not seen since May last year. Institutional investors are chomping at the bit to buy Bitcoin amid renewed optimism of a spot Bitcoin ETF being approved. The break above the $31,800 resistance level coincided with a drop in the open interest, a metric that assesses the notional value of all positions across crypto exchanges. The decline, which was Bitcoin shorters getting liquidated and having to close positions, is in contrast with the open interest on the Chicago Mercantile Exchange, or CME, a venue favored by institutions, which was topping 100,000 Bitcoin, or $3.4 billion in open interest for the first time. CME's market share has increased to around 25%, approaching that of Bitcoin's perpetual market, according to Vettel Lund, a senior analyst at K33 Research. CME has also captured an 80% market share for all traditional expiry futures, and daily trading volume for Bitcoin futures on CME hit $1.8 billion in the past 24 hours. There was also intense buying pressure in Asia, with the Hong Kong CSOP Bitcoin Futures ETF reaching $22.37 million in trading volume on capital inflows of $17.64 million, a record for both volume and inflows. The previous day's turnover was just between $125,000 and $250,000. An altcoin gem that we've been talking about for a while now in Altcoin Buzz is Mina Protocol, and it recently pumped 101% in the past 24 hours. So if you've been watching this channel, you're probably doing pretty well right now. Mina Protocol is a minimal, succinct blockchain built to curtail computational requirements in order to run dApps more efficiently. Mina has been described as the world's lightest blockchain since its size is designed to remain constant despite growth in usage. Furthermore, it remains balanced in terms of security and decentralization. The protocol uses ZK snarks, a cryptographic proof that enables someone to authenticate information without revealing said information. At the heart of Mina Protocol is Mina, its native currency, which functions as a utility coin and medium of exchange. The reason for Mina's pump yesterday is it was listed on the South Korean exchange Upbit, and they always pump new coins like crazy. We may see a pullback from this crazy pump over the coming weeks as people take profits, but it will be a great gem of ours in the coming bull run. That's it for Altcoin Buzz Update. I'm Cody Buffington. Thanks for watching.